Let's go ahead and start. I'm sort of looking to see if all the folks that are on here are folks that had questions. Uh, I see several of you that had questions that are on here. Thought I'd wait and take the questions of those that are a little bit later if they're not on the call yet, because they may be coming on. I think everybody's here that actually wrote a question. Okay, let's go ahead and start. I'll answer the questions that you guys sent in. You didn't send in too many. And hi, Frank. And then we'll look through the Form 1040 and some of the other schedules. And let me put a finger on a few things that you want to be sure and take note of as you do your tax return or pull your information together. If you're having someone else do your taxes, the better off they and you will be if you can sort of pull the information together rather than just shoving them at them. When I was in accounting school, my professor used to be a CPA for a lot of ranchers and farmers. And he said there were two different prices for preparing tax returns, the cigar box price and the other price. And of course, all the students, we didn't have any clue what he was talking about. But he said, if you bring all your receipts to me in one cigar box and show them that and tell me to do your tax return, price just tripled. And Frank says yes. So, if you can organize what you think are credits and deductions and adjustments and your W-2 and your 1099s, put all that stuff in neat order to take it to your accountant or your CPA, they will be happy and you will probably be happier than you would have been otherwise. Okay, so I would just encourage you to do that. Okay, here's a question that Donald Holiday has. And this is really a multifaceted question that I'm going to go back to first square on ministerial housing allowance and how it's determined and how it's used. But the question is this, is how do you calculate the fair market rental value? And then the follow-up question, what happens if I pay less than the fair market value? How does that affect my housing allowance? Okay, first of all, the fair market rental value in the tax code, the way it is spelled out is the fair rental value plus furnishings and utilities, okay, or furnished plus utilities. So it's not just a bare house, but it's a furnished house plus adding the utilities on top of that, okay? The IRS gives absolutely zero guidance about how you come up with that number. So there's a big help. But most people that want to do that calculation go to Zillow.com, they go to Realtor.com, or a realtor, a real live in the flesh realtor who will give you a written estimate of what your house furnished would be worth. And that's probably the best option. But if you don't know a realtor that can do that, then one of those others are pretty close. I think Zillow lists most houses with furnishings, and without, I think it does. I'm not sure. But that is sort of a nebulous figure that you want to try to come up as part of your component for determining how much that you can exclude. Now, if your church doesn't do a housing resolution before the payments are made, you don't get any housing allowance. So it's prospective. You can't come back later in June and say, oh, I meant to do it in January. I'm gonna catch up. You can't do it. It's prospective. So it's the amount that's declared by the church. And I would encourage you, in most cases, to go ahead and overestimate what you might have as housing allowance for the year, what your need might be, especially if you're going to have modifications or renovations of your house, if you're expecting to have a down payment, or if you want to pay extra on your house, then your church needs to set your housing allowance at a higher number. Now, the second figure is what you actually spend. Well, and the third one is the fair rental value furnished plus utilities, what we mentioned at the top of the question, okay? It's the lesser of those three. So if the fair rental value furnished plus utilities is less than what you actually spent, then you have to stick with that figure. Most ministers go by what they actually spend because they estimate enough that they can can exclude everything they actually spend because the church sets it high enough to cover it. You tell the church what your need is, the church just ratifies it. You know your budget better than the church does. And the other piece is you do not account to the church for your expenses. You account to Uncle Sam for that. Okay. I remember one time years ago when I was in public practice in Houston, I went to an audit with a foreign national, actually an Iranian that was a green card resident here in the United States, and his tax return got audited. And I've never had more of a stark reality. He was 5'4", and the IRS examiner looked like Rosie Greer. He was like 6'8" when he stood up. And this 5'4" Iranian was standing in front of this 6'8" Rosie Greer type, and he started asking him questions. I thought the guy was going to put his fingernails through my skin, had his hand on my knee, digging his fingernails into my leg because he was so nervous. So I hope you never get into a situation like that. But when it comes to accountability for what you have claimed as housing allowance and the receipts that back that up, it is up to you. The church has no part in it. So whatever you do well and be able to justify.
Hey, Gary.
Yes.
So I know you and I've had this conversation. What all counts as housing expense? What all can you actually, because it goes a little deeper than I had thought at one.
Yes. In the minister's tax guide, that's a good question. Thank you, Becky. That I recommended to you, the 190 pages of bedtime reading. There actually is a schedule in there that's help to help you determine what your estimated expenses might be. Obviously, it's your mortgage payments. It includes your interest. It's all your property taxes. Even though property taxes are limited to $10,000, if you itemize, all your property taxes can be included in your ministerial housing allowance. You want to include all of your utilities, obviously, any repairs that you do on your house, any furnishings, that's rugs, sofas, chairs, pillows, any of that kind of stuff that's necessary to furnish your house. And be sure and be ample with your cleaning supplies. My wife cleans excessively with hydrogen peroxide and vinegar. She has some kind of mixture she makes. And I exclude most of the vinegar and most of the hydrogen peroxide that we buy. Okay, so there is no set list, but if it's something that relates to you doing life physically in your house, then you probably can include it. They used to say that you could include buying a lawnmower and putting gas in it, but you couldn't exclude the guy that pushed it if it wasn't you. My experience is that most ministers have their lawn cut now and they pay for it and they exclude it. So that's just something you'd have to fight on the lawn when you're in front of a 6'8" examiner. Okay. But those are the type of things I would say you need to tend to be generous. And there's no problem if you go to Walmart and you buy cleaning supplies and things like that, and you buy your groceries, you keep that receipt. You just highlight the part that is housing and keep that receipt. Okay, so it's pretty extensive what you can exclude, and the IRS will not tell you specifically, but that guide, that worksheet that's actually in the manual, the Minister's Tax and Financial Guide, is a good help to help you calculate what those expenses could be. Okay, Donald, did I answer most of that question as well as, or maybe too good?
No, you did. And part of it is I know that the house that I rent is way less than I know that the fair market rental value is. I know that. But we based our housing allowance more on what we pay and not the fair market rate. And so we're closer to what we pay. We'd be way less than the fair market amount. And I know that. So I was just trying to figure that out and make sure
Right. Well, the fair market right. is a limiting factor. It's not an allowance factor.
Right.
So if you don't spend the hard dollars, you cannot exclude them. You can't exclude them if the church doesn't declare them.
Right. Okay.
Okay, you got it. You understand. Okay. Does anybody else have a question on housing allowance?
Yeah, Gary, you mentioned groceries also?
Well, Only if you can clean house with them.
Oh, clean house. So all your steaks and lobsters, you can't. Okay.
One thing that I'm not sure that I made totally clear in the last session is that your full housing allowance is included in the base for your Social Security. Even though if you spend it, the qualified housing expenses are not subject to federal income tax, but they are subject to Social Security. Not too many ministers nowadays live in a parsonage, but if you do live in a parsonage, you do not have to pay any income tax on the value of that parsonage. But you do have to pay Social Security on the fair market value of the parsonage. If there's anybody out there, if you know anybody that lives still in a parsonage, then that's something that you have to do, even though there's not an expressed value. Even for ministers that live in a parsonage, the church should probably declare some kind of housing allowance for them, especially if they have to pay utilities, they have to buy furnishings, they buy cleaning supplies. So even ministers that live in a house provided by the church need some kind of housing allowance for out-of-pocket expenses for housing. I know some churches that have a parsonage, they pay all the utilities too, and that's fine. That just means it's less out of the minister's pocket, but that is a income tax-free benefit. Okay. I'm gonna answer a question that Frank asked. I think, Frank, your question, did I say, is a minister's retirement financial gift tax exempt? Generally, no. What I did say is that your housing cash allowance that is paid to you by the church in retirement can be exempt if it's cash, or the church can let you live in a parsonage totally tax-free, no Social Security, no income tax if you're living in a church-provided house. But the minister's gift at retirement is usually taxable. There is case law that in some unique circumstances that the minister's retirement gift is not taxable. Usually when that's the case, in the cases that I've seen, it has to do with the fact that the pastor has been considerably underpaid over a long period of time. And the gift at retirement is just sort of a makeup for what the church wasn't able to do. When the W.A. Criswells of the world that made a good salary retire and they get a new Cadillac when they retire, that should show up on the W-2 because that is a taxable value retirement gift. Frank, you're muted. Let me unmute you. Okay, did that answer the question?
Yeah, because you are right there. In my research, I found a ruling, IRS ruling 55442, that basically stated the 3.1 that you made, that the pastor has a need. And maybe number two, that it was not an agreement prior to his retirement, we're going to do this for you. And number three, that he had no specific assignment to come back. He could teach or preach ever so often, but there was no agreement that on a regular basis, he was going to do anything else for the church. That becomes non-taxable.
And that is a facts and a circumstances arrangement.
Right,
And
yes,
so,
sir.
so it's hard to have a tacit, hard and fast rule.
Yep.
But if you even think that there's something similar to that, that is the case for your pastor, you might want to research that before your pastor gets to that point. And the point that Frank made is basically you have to be retired. You can't be still actively in service to get any of these benefits that relate to retirement. Okay.
Thank you, Gary.
Yeah, and I mean a large part of what would be looked at if it was questioned whether it's taxable or not would be intent of the church and intent and understanding of the recipient.
Right.
And that's where a judge would go, for instance, to try to unearth what really did happen in substance. Yeah. Okay. The next question, I think this is Donald's question also. It says, can an HSA be paired with a health sharing program? a health sharing program, I assume what you're talking about is like Samaritan's Purse or the Mennonites, and different groups have those different plans. Generally, the health sharing programs, not generally, always, so far, they are outside the parameters of the ACA and most health reimbursement plans. The church can reimburse you for those, but typically those are added back in box 1 on your W-2 as an income item. Now, an HSA cannot, no, it cannot be paired with a health sharing program, because an HSA can only be paired with a high deductible health plan, an HDHP, which is $2,800 minimum deductible and $13,800 maximum out of pocket. Because the HSA, the health spending account arrangement, is designed to be paired with that. I mean, they go hand in glove. One cannot exist without the other. And again, you can set up your own HSA. Your employer doesn't have to do that. And I'm going to show you when we walk through the tax return where you can actually adjust off your HSA contribution if you set up your own account so that you don't pay any income tax on it. All right. I personally really like HSAs, health savings accounts, because it's yours. It's just like your individual retirement account or your 403B. It is yours. It doesn't belong to your employer. It doesn't go away. And like I said earlier, the health savings account can actually be inherited if you don't spend it by the time you and your wife die. It actually goes to your heirs and is part of your estate. So the HSA is something that keeps on giving. You know, even after you're age 65, you can still use those funds. Matter of fact, those of you that are not there, you will find out at some point that you have to pay for Part B of your Social Security. It's a monthly premium that has to be paid. In some cases, you might even have to pay for Part A. And that can actually be taken out of that HSA account, even though you cannot dote or put funds in it after age 65, you can still use it. And even for some Medicare related expenses after you're age 65. So there's a lot of flexibility in that. The only big thing that you cannot do with an HSA after 65 is pay for a Medigap or a Medicare supplement policy. They will not allow you to do that. So you just need to look down what HSAs will cover if you're interested in doing one. But you have to pair it with a group policy, which probably is going to come through your employer. But you can set it up even if your employer doesn't provide the HSA, but does provide the group coverage. Donald, how does that respond to your question?
That was good. Thank you.
You know, one thing that I would say is that there is a conversation in Washington when they're not talking about other things like they are today. There is conversation about bringing health sharing plans like these under the coverage of what's reimbursable. So it has not gone unnoticed, because increasingly with the cost of group health insurance, many people, not just ministers, many people are going, especially people of faith, are going to these health sharing arrangements because the premiums and the out-of-pocket is so much less. And hopefully that you're rubbing shoulders with people of similar ideas and similar integrity. You're not dealing with a secular company generally.
Thank you.
Okay, Ms. Roberts, is it Malitri? Is she here?
Yes, I'm here.
Okay, yeah, your question was if a child's 24, if a child is 24, do they have to file their own taxes? And the answer is yes. The clock ran out. You get to claim them until they're 18. And if they stay in college at least 5 months of the year, you can claim them 19 through 23. Now, you can still claim someone after they're 24, but they have to be a dependent. They have to have very limited income. I think it's less than $4,100 a year or something. And they have to have very limited interest income. So you can claim people that are older than 24, but they're usually people that have virtually no income and no investment income. So generally speaking, you probably lose them on your tax return at 24. Does that answer your
Awesome.
question? Okay.
It did. Thank you so much.
I wish it were better news, but they have to run out at some point.
Yeah,
Yeah.
me too.
Sheila McConnell asked, what line is the stimulus amount entered on line on 1040? Actually, there is a line. Sheila, are you here? There you are. It's line 30 on Form 1040. If you look at line 30 on Form 1040, that's where it is. The interesting thing about it's called the recovery rebate credit. The interesting thing about that, even though you should have already received it, is it's going to be based on whether you can get it or not. It's going to be based on your 2020 tax return. If you would have already gotten it, it would have been based on your 2018 or your 2019, those two different stimulus payments. But this one, if your income went up precipitously over 150,000 for a couple in 2020, and you've been under that in 2019, technically you'd lose out that benefit. You wouldn't get the stimulus payment because it's going to be based on 2020 adjusted gross income. Yeah.
Thank you.
Do you know someone that did not get their stimulus payment?
My daughter and son-in-law got the first one, but have not gotten the second one.
Okay. Okay.
Gary, on most of the income tax software for 2020, it'll ask two questions. One, did you get the first one and how much was it? Did you get the second one and how much was it?
Uh-huh.
And it's for two reasons. One, that you said just to make sure that people don't double dip. And if you didn't get it, they would come back and give you if you have a refund, they will add to your refund.
Right. It
But on
does.
the software for tax preparers, it is asking, tell me if you've got stimulus 1 and how much, and stimulus 2 and how much.
And there's also been some confusion, Frank, as to whether if you got it, it was supposed to be listed there. And the answer is no. If you got it, you don't do anything. This is only to claim if you did not get it.
One
Right.
more quick question. If I just received my $600,
Yes.
is that going to be reflected on my 2020 tax return?
You don't do anything with it. It's non-taxable.
Okay,
No,
but
if
as
you-
far as saying, did you get it?
No, you do not need to declare it all. The only thing that you put on line 30 is something you did not get.
Did not get, okay.
Yeah, it's designed to help you reclaim it. For instance, Kate that works in our office, she and her husband still haven't gotten the first one. And you can go on to the irs.gov website and check the status of your stimulus payment, or you can call the IRS and sit on hold for 2 hours and ask the question of when's my check getting here. You know, really at this point, I would say their best bet's going to be to put it on line 30 and just mail it in. Yeah.
Gary Militri has her hand up.
Okay. Yes. Yes, Melissa.
Okay,
what's the
so
question?
my question is, the stimulus payment, that was for taxpayers or just for working individuals?
It's the stimulus payment that came out of the CARES Act and then the other one that was done at the end of December last year.
Okay, because my son didn't get his. I'm wondering, because last year he didn't have any taxable income. So
It's
I'm wondering,
for children under 17. How old is your son?
he's 24.
Okay, if he works and filed a tax return, he should have gotten it. If he does not file a tax return because he has limited income, you can go on to the IRS website and provide your information and they will send it to you.
Okay, okay.
Yeah, there's
Thank
some
you.
people that actually had to file a tax return for the first round of stimulus payments, like people that only get Social Security and they didn't have to file a tax return. They actually had to file a tax return in order to qualify for it. That was the easiest route.
Okay,
Okay.
thank you.
Uh-huh. Okay, Terrence Howard has a question about the 403B along with the housing allowance that can be deferred on retirement. Okay, there's a couple of different issues, 3 different issues there at least. Okay, Terrence, let me try to tackle it. Let me say again how the 403B works. The 403B is a provided fringe benefit that your employer provides for you, and you can put money along with that to increase the amount that's going into your retirement account. Okay. Like I said earlier, I think for 2020, the total amount between you and your employer that can go into your 403B in 2020 is $57,000, which most people don't put in $57,000. But if you're under 50, you personally can put in 19,500, and then you can add 6,500 to that if you're over age 50. So you personally could put in at least, let's say that you have a Guidestone 403B account. You personally could put in $26,000 out of your current salary, not your housing, out of your current salary amount, and it's tax deferred. So you do what's called a salary reduction agreement. That's between you and your employer that says to your employer, take X amount of money out of my check per month and send it to my Guidestone 403B account. And so when that money comes out of your account, your employer takes charge of it then and sends it to your account. And box 12 on your W-2 will show the amount that was salary reduced. And you pay no income tax and no Social Security as an ordained minister on that money when it goes in. So it tremendously reduces your current year's income and completely eliminates your Social Security obligation on that amount of money. That's on the front end for ordained ministers. For ordained ministers on the other end, as it comes out, any of that is declared as housing allowance when you are in retirement is exempt from Social Security and from income tax, again, as long as you use the money for qualified housing expenses. Very seldom in life will you get a double whammy ride like that, because it's not paying any tax going in, nor is it paying any tax coming out if you pay it properly. Because the Social Security completely gets escaped on both ends, and the income tax goes away if you use it for housing when it's coming out. When it's going in, it's tax deferred. When it's coming out, it's tax exempt if it's used for housing.
Hey,
And
Gary,
what
does
question
it,
do you have about that?
No, you answered it.
Okay.
That was great.
Yeah.
well, I had a question for him. So you
Yeah.
said if you do it right, so do you have to work through somebody and let them know what amount of that is housing so that you can pull that out?
You need to let Guidestone know, but actually the 1099 that Guidestone sends you, I haven't seen one lately. I don't think I saw somebody sometime back that said that it may be deemed as housing allowance based on a statement or criteria of the taxpayer or something like that. It has some kind of disclaimer on it. But I would talk to Guidestone before the year begins each year and say, I want X amount of money to come out, and I want it all to be housing. Now, you're not completely free to tell them how much to take out, because you are, after age 72, going to have a required minimum distribution. So if you only need 10,000 for housing, you say, that's all I want. Well, if your actual RMD for that year is 15,000, you have to take out the 15. And depending on how much you're taking out, you may not want to declare it all as housing, but there's no reason that you couldn't. Declare everything as housing would make it simpler. And then if you don't use it, you just add it back into line 1 is unused housing allowance. Okay. All right. Terrence had a question about how do you know if you signed the form 4361? This has a really long title. That's a copy of it right there. And the title is Application for Exemption from Self-Employment Tax for Use by Ministers, Ministers of Religious Orders, and Christian Science Practitioners. He gets all of the above in there. But the 4361 is the application that you must file by the filing of your second full tax year return after the year which you ordained, and you earn at least $400 in ministerial source income, okay? The question that Terrence has is, how do I know if I signed one of those? Well, if you don't remember, then the most telltale sign is if you're paying the 15.3% Social Security with your income tax return. If you're not paying the tax and you didn't sign a 4361, you have an issue. If you did sign the 4361 and you're paying the tax, you're overpaying. Okay, so there's two numbers you can call. One of them probably won't do you any good. The other one's going to take a long wait, but I'll tell you two numbers, okay? The IRS individual tax line number is 1-800-829. Guess what? 1040 is the last four digits. 1-800-829-1040. That's the individual line. We had a tax issue recently on our 941s. I waited online on the phone line for 65 minutes, and it took another 60 minutes for the girl to answer my questions between the 8 times that she had to leave the line and come back. So plan lunch or some kind of read a book, something around that if you call the IRS. The other one is the number that you can call to make appointments with a local office to talk to them. That number is 1-844-545-5640, 844-545-5640. You can make an appointment with a local, like your local downtown Fort Worth office, but during the pandemic, there's a lot of questions that they don't want to answer. So when you go on to make the appointment, they show on the website what type of questions that they will answer for you currently. And it's probably not a 4361 answer. I wish I could be more hopeful.
And Gary, you also said with that form, there was like a window that they allow you to get back in without being penalized. Is that, what was that window?
That window does not exist currently,
No.
but there was a bill presented in Congress in February of last year that has not advanced at this point. But it's the most generous window that's ever been offered, because if it got approved as presented originally, it would allow people to opt back in and owe no back taxes. Because the couple of windows that have happened in the last 20 years, you could get back in, but you had to make substantial restitution for payments that you didn't make. So it's not a possibility right now, but at least it's on somebody's mind in Washington. Okay.
All right, thanks.
Yeah.
And you know, Gary, I have dealt with two pastors that they subscribe to Smart Church, where they provide a number of things for them to get organized as a church. And in that package, they included the 4361. And this pastor signed it and sent it in not knowing what it was. And now he can't get out. And my question would be, I wonder why they would do that as part of a package for a church who's getting organized. And probably the pastor didn't read it correctly or read it at all, but he submitted that form, and of course now he's exempt. He cannot come back in.
Yeah, I don't know. I don't think that's wise for them to do that.
Yeah, me too. I question that for sure. In fact, I called them and they never called me back.
Yeah. Because for many people that got into it, they got into it with less than adequate information.
Mm-hmm.
And at that point, you're sort of trapped. And one of the things that I say to the young ministers is, do you really object to Social Security? Medicare is not a concern, but if you were disabled between now and the time your children grow up to be age 18, would you want them to get supplemental payments? If you were disabled while your children are small, would you want to be able to get disability? And the truth is, if you have 40 quarters of coverage from non-ministerial source income, you're going to have some level of coverage. Mm-hmm. But the affidavit that you sign is just that you have a moral, religious objection to receiving public support payments based on your ministerial source income. Mm-hmm. And that is an extremely narrow window. There is no other provision other than that. So, but if you can genuinely, with integrity, sign that, you can do that. But it's something that needs to be done with some consideration and with good information.
And
Okay,
Gary,
yes.
on
right,
that
Nikki.
one too, I mean, I know a pastor that was here in Tarrant, this has probably been 20 years ago, but he died of brain cancer. And was one of the ones who opted out, and it was really terrible for his family and just didn't get that help. So that really raised that window for me to try to help ministers make sure they make a good decision when they're thinking through this.
You know, if you get to the point that you're ready to retire and you don't yet have 40 quarters of coverage because you opted out of Social Security, you can still buy back into Medicare at that point. But the Part A that's automatically covered if you have 40 quarters of coverage is extremely expensive. It's like $400 and something a month, plus another $150 for Part B. So you could be out $500 to $600 a month just to buy into Medicare at that point. So there's just a lot of things to take into account before you would sign this. Okay. All right, Cynthia is going to put the 1040 on the screen. We're going to share the screen and do a smiling, joyful walk down through the 1040. And let me just point you to a few things that you may not realize are on here, the things that you'll want to know as you do your tax return or get your stuff together for a tax practitioner to do it for you. As you can see, this form, if you go all the way down, it doesn't cover the whole page, but it's 2 3/4 pages now. And they added 3 additional schedules in order to do this that pour in to the 1040. For most people, you're going to use line 1 because that's what comes right off of box 1 of your W-2. All right. But that also is the line where you will report any ministerial housing allowance that you did not use. Okay. So, and you actually write on that dotted line, ministerial housing allowance included or something to that effect. Because if the IRS looked at your W-2 and they added them all up, they're not going to add up. So you just put a notation there that the ministerial housing allowance is added in to line 1. Qualified dividends and interest and ordinary dividends, all of that is what gets reported on Schedule B. Schedule B. Now, if you don't have at least $1,500 of taxable interest or dividends, which could be very possible these days with 0.5% interest, even if you have savings, you don't have to fill out the form. You still have to report it, but you don't have to fill out the Schedule B if you don't have at least $1,500 of dividends and income. Then on 4 and 5, you see the lines that have to do with your retirement type distributions. The IRA distributions are your traditional IRA monies that are being distributed to you. In other words, generally your RMDs, your required minimum distributions that you take out of your traditional IRA go right there. And again, those have to start coming out by the time that you're 72. Unless, let me go ahead and say this caveat, unless you're still employed full time. You don't have to take the RMD if you can prove that you're still employed full time at age 72. But you want to make sure that that gets documented well because the penalty is 50% of what you should have taken if you don't take it. All right. The pensions and annuities is where if you get a pension from Guidestone, for instance, on line 5, that's where that's going to go, is right there. And also on this line is where you're going to report any rollovers that you have, but you write on that line somewhere that the rollover portion to come up with the taxable amount. So if you take a withdrawal from your 403B and you roll over something, the amount that shows under 5A may be a whole lot more than what shows up on 5B. You want to make sure 5B is only the part that's taxed, because you can do one rollover a year and that's not taxable. It's just rolling it over like from one type of account to another, like from a 403B to an IRA or vice versa. So be careful that you don't tax yourself more than you should if you had a rollover. 6A Social Security benefits. That may look odd to some folks. You say, well, I didn't think Social Security was taxable. Well, guess what? For a married couple, if you earn between $32,000 and $44,000 a year, which is a pretty low threshold, up to 85% of your Social Security benefits can be taxed. You say, well, that doesn't sound fair. Well, no, it really doesn't, does it? Because you paid for those benefits. But it's been probably 12 to 15 years ago that the law changed, maybe longer than that, that said Social Security benefits up to 85% is taxed. So there's a formula that you go through to determine that. You basically take your adjusted gross income and add back in half of your Social Security and some of your interest that's exempt. You come up with a number, and they calculate out what percentage on that worksheet is actually subject to tax. So you don't get a pass go for free on Social Security if you earn more than $44,000, or even in that range of $32,000 to $44,000 as a married couple. Capital gains is on D. And one thing that I would comment to you on capital gains, if you don't know what that is, basically it's something that you invest in like a stock. And if you keep it more than 1 year, it's considered a long-term capital gain. If you keep it less than 1 year before you sell it, it's called a short-term capital gain. And you do a reconciliation sheet where you offset your gains and your losses, and you come up with a net long-term or a net short-term gain or loss. Now, if you have a gain, guess what? You get to report the whole thing. If you have a loss, you can only write off $3,000 a year and carry the rest forward, okay? But that capital gains tax rate is actually, I think, pretty favorable because up to $80,000 of taxable income, your long-term capital gains rate is zero. In other words, you pay no tax on long-term capital gains until your taxable income for a married couple gets beyond $80,000. And between $80,000 and $496,600, your tax rate's only 15%. You have to make over almost $500,000 to be in the top capital gains rate, which is 20%. Now, when I say those percentages, what I'm telling you is there are different tax rates that apply to capital gains versus your other income sources. Remember this morning, we said there's 0, 12, 22, and so forth. There's 7 different tax brackets. That's for regular and other income, but for capital gains, the tax may be 0 depending upon your taxable income. So and there's a worksheet in the instructions for the Form 1040 that you go through to determine what portion is taxable. Then we talked this morning about deductions and adjustments and credits. Remember that, right? Well, here's where your adjustments start. And there's a schedule. The first schedule is called Schedule 1. Schedule 1 is the additional income and adjustments to income. And the second part of it has a whole bunch of stuff on it that you really want to take note of. Believe me, Schedule 1, take note of that. Schedule 1 adjustments is part 2 of Schedule 1 Form 1040. Here's why you want to look at that. First of all, if any of you are educators or you have someone on your tax return, like your wife or husband that is an educator, you can adjust off up to $250 of classroom expenses that they have. And this year for 2020, and it'd probably be the same in 2021, they can even include PPP equipment they bought to be in their classroom as part of that $250. So if they buy paper, supplies, hand sanitizer, books, anything that they buy for their classroom use can be adjusted off up to $250. 12 is the health savings account deduction. This is what we talked about. Donald had a question about earlier. If you set up your own account, this is where you take it back off if you took money and put it in an HSA during the year on line 12 on Schedule 1. And it can be up to $8,100 a year if you're over age 55. That's a lot of money to put away, folks, for a health savings account. And that money earns interest or however you invest it and is never taxed if you spend it on medical expenses. 14 is one that you do not want to overlook. As a minister, we've said that you pay self-employment taxes, that the 15.3% rate, but they allow us to adjust off 1/2 of that. So 1/2 of your 15.3% tax for self-employment tax gets backed out here. The government gives it back to you, adjusted off of the top of your income. So all of us as self-employed ordained ministers will use line 14 on Schedule 1 to come up with our self-employment exclusion. If you have student loan interest, and a lot of people do, you can adjust off up to $2,500 a year of student loan interest right here. It comes right off the top of your gross income. So if you've got student debt, or somebody that's a dependent on your tax return has student debt, there's an adjustment that can come off for you. If you contributed money to an IRA during the year with after-tax money, that's where you can adjust it off. And then the last one I would call to your attention, line 21 on Schedule 1, is called a tuition and fees deduction. It's actually up to $4,000 for married filing jointly that you can take the credit on if you have those kind of expenses and don't take one of the credits. There's the American Opportunity Credit, the Lifetime Learning Credit. You can do either the credit or you can do this adjustment for educational expenses. You just have to calculate it both ways and see which one works out best for you. Okay. Then those come up to a total, and that gets adjusted off on line 10A on the 1040. And then 10B is what we talked about this morning. This is a new line based on the $300 cash contribution that you can adjust off for 2020 if you don't itemize. If you itemize, you don't need this because you'll include it in your itemized Schedule A. But otherwise, you need to put your $300 there of cash contribution. You come up with the total adjustments, and line 11, this is a big important number, line 11 on your Form 1040. That's where you get your adjusted gross income, your AGI. And that is a determining factor for many of your credits, and your limitations are based on your AGI, your adjusted gross income. So it's very important that you come up with a good solid number there, because that's the basis of a lot of other calculations. Line 12 is your standard deduction, which we said is 28,000, what did I say, 28,800, I think. No, what did I say this morning, 28.8?
24.
24.8, yeah, 24.8 for this year, and then 1,300 additional if you're over 65 for each person over 65. So that's where you take your standard deduction. If you don't itemize, or if you do itemize, that's where the total goes there also. The one thing that I really want to call to your attention on the front of this is line 13. I hope that you already know about this, but this is Form 8995. 8995. It's called the Qualified Business Income Deduction Simplified Computation. This was part of the Tax Change Act, the Tax Cuts and Job Act that came out at the end of 2017, is that for your honorariums, funerals, outside speaking engagements, you have what's called Schedule C income, independent contractor income, okay? When you come up with your net income from that activity, you may have mileage and other expenses, hotels and other things, meals that you incurred while earning that income. So you deduct those, you come up with a net income, but this form allows you to adjust off 20% of your net income from your Schedule C revenues. So if you ended up with a net of $2,000 in funerals and weddings and other speaking engagements, you can deduct off or adjust off 20% of that $2,000. In other words, $400, you can adjust right off the top of your gross income, your total taxable income. I suspect there may be ministers that don't know about this, that have not been using this. If you use tax software, I would fully expect that it will guide you up to this point, but this is something that did not exist until 2018. So it's a way that you can get an adjustment, and it's a great benefit for people that are self-employed, and the limits are way, way high. I mean, you can do it up into $300 and something thousand you can adjust off 20%. Most of us don't worry about the hundreds of thousands of dollars for honorariums, but whatever your honorariums are, that is a benefit that you can take off 20% off the top with the Form 8995. And then you add those together and you come up with a taxable income. Now, beyond the adjusted gross income, the taxable income is the next most important figure because that's what your tax is based on. Okay. Okay. We've looked at the first page and we're going to look quickly at the second page, but what questions do you have about the first page? What questions do you have about the first page?
So it's Melitra. The question that I have is, how does this apply to a bivocational pastor? So he's working a secular job and getting maybe a little bit of a stipend from the church.
Uh-huh.
So does he just add that, all of that income into line 1 and then go from there with everything else? We don't get a housing allowance. We don't get any of those things. So I'm trying to figure out how that would work.
Melita, what I tell most bivocational pastors that have very limited income from the church, if they are ordained, licensed, or commissioned, and they're pastoring, I tell them to take 100% of their compensation as housing allowance.
Okay.
Because if you're only making, let's say, $1,000 a month as a part-time pastor, you're probably going to spend $12,000 on housing expenses. But the church just needs to declare the housing allowance in advance and pay it to them. And actually, the W-2 doesn't list the housing allowance as an income item. It listed in box 14 on the W-2. And it's a memorandum entry. It's not even required to be put on there. A matter of fact, if all you pay your pastor is housing allowance, you don't even have to give him a W-2 if he doesn't have any taxes taken out of that. You can just give him a letter acknowledging the amount.
Okay.
There's a lot of integrity involved in that, but that he would declare it. But bivocational pastors are qualified to get a housing allowance if the church declares it.
Okay.
Yeah.
So I guess I need to just get with the accounting people for that, right?
Yes, absolutely. If you have any questions, let me know.
Will do. Thank you so much.
Yeah. Okay, let's look at page 2 right quick. This is where most of your credits come together. As we said this morning, some of them are refundable, some are partially refundable, and some are non-refundable. Okay. The line 20 says amount from schedule 3, line 7. Okay, that's one of those schedules that got added on. But that schedule has your non-refundable credits, your child and dependent care expenses, your education credits, your retirement savings credit. Those are the 3 primary ones that you might be claiming. And if you claim any of those credits and you have a federal income tax obligation and you put that amount on line 19, it gets taken off of your tax bill. Those are non-refundable. And remember what I said this morning, you can only offset non-refundable credits against your federal income tax obligation. And you can only reduce it down to 0. So if you have refundable credits, you want to use them. But if it's more than the amount of your income tax just goes down to 0. But some of these refundable credits, like the child tax credit and the earned income credit, are actually refundable. Even if you don't have a income tax obligation, you can apply those towards your Social Security obligation. And if you still cover that and have a balance left, the government will give you money rather than you paying money. The truth is, most ministers are probably going to use, unless they have a lot of children, they're going to use their provision for the child tax credit covering their Social Security allowance, unless they opted out of the system. Okay. Then line 23 is where you come off of Schedule 2, where you report your self-employment tax, which is your 15.3 Social Security. So you got to take that credit off, and now they say, okay, now we've calculated your federal tax. We gave you some non-refundable credits. You came up with the number. Now we want your Social Security money. We dealt with the federal income tax. Now we want to see how much you owe us for Social Security. And on line 24, you come up with total tax. And then line 25, you list the ways in which you paid tax in during the course of the year. As a minister, if you had voluntary federal income tax withheld from your check, then it's going to show up on your W-2, box 2, and you put that number on line 25A. If you did estimated tax payments, then you would also put that, I think that goes in 25C. So any way that you paid in tax during the year, you want to show that, so they will offset that against against your obligation. Excuse me. Then we get into the refundable credits, lines 27, 28, and 29. That's the good stuff. Those are the ones that the government would allow you to use those against your Social Security, your income tax, whatever obligation that you might have. And so if those things apply to you, you want to take advantage of them. And you just do the math from there on out. Like I mentioned, line 30 is the recovery rebate credit if you need to do that for the stimulus payment that you didn't get. But you can either get the money back if you do a refund, or you can apply the amount that you overpaid to your current year's tax liability. If you don't want a refund, you can go ahead and say, we'll apply that to my next year's tax bill, which is an option. I would remind you that if you owe taxes, you mail your return to a location, your payment to a different location than if you don't owe taxes. In Texas, if you do a refund, you mail it to an Austin, Texas location. If you owe taxes, you're going to send it to North Carolina. If it's digital, who knows where it goes? But your payment goes to North Carolina if you owe taxes. Okay, what questions do you have about page 2? Frank, what comments would you make based on everything that you've heard and seen today?
Well, it's getting more challenging for people to do their own personal tax return. It's a real challenge. Particularly for pastors, as you said, I have done a number of amended returns done from most of the popular, mostly known commercial firms that do tax preparations. And it's like you mentioned earlier, they don't know how to handle the Social Security, Medicare situation for pastors. They exclude that. As they exclude housing allowance from taxes, they go back and exclude it from Social Security and Medicare, and it creates a problem. So that's what I see, a very common error, not experience on ministerial ordained tax returns. And that's what I specialize in. You know, I looked very carefully at these things, and so it really concerns me when I have to amend and they have to go back and repay. But you do a very thorough job, brother. You do a good job.
Thank you. As you can tell, Frank is an option for doing a ministerial tax return. Frank, if you want to put your contact information in the chat box, that'd be great.
Okay.
If you guys want to ask me for the information from PSK Accounting, I can give you later the specific names of the people in their tax department. Or if you know someone that you really have confidence in doing your taxes, let me know, and I'll talk to them and see if they might be an option. But I know that Frank does a conscientious, thorough job. I think that PSK does too. Another one that does minister's taxes is Elaine Somerville, but he's well known in Arlington. She is not the cheapest price on the block, but they do minister's taxes. So if you want some references, we can provide those to you. I know there are lots of pastors have been using the same tax practitioner for years. And I think they feel comfortable with him, and that's great if you have someone that you feel comfortable doing it. But You know, it's like Frank said, sometimes when you look over somebody else's work, another set of experienced eyes like his can see things that didn't get caught in the first round.
Yeah,
And
and
so,
Gary, just FYI, our rates on, based on what you mentioned, married filing jointly is around $200. And
Uh-huh.
what we do everything online. We send a secure link where people download all their tax information. It comes to me. We input it on the forms. We talk it over the phone, and they sign their return on their cell, and it gets filed, and they download a copy, and they never came in to see us.
that's great. Turnkey deal.
Yep.
Pandemic treatment that's been going on for a long time.
Yes, sir. Yeah.
Yeah. Okay, what other questions do you have? I know some of this stuff gets a little technical, obviously. But again, I would say that if you do your tax return and you want me to look at it, don't charge anything for that. I'd be glad to have another set of eyes on it. Just do it on your TurboTax or whatever you're going to use, print it off, and I'd be glad to look at it if you want me to, just to have another set of eyes on it. Don, you had a question, Don Holiday.
Yeah, this kind of goes back to it's kind of back to a stimulus question. We had a child in 2020 in July, and of course, it was based on the previous tax year, so they weren't included in that. Do you know? I've heard that you can, with the taxes, you can add that child on there for the stimulus. Have you heard that?
I think you added on that line 30.
Yes, you
Is
can.
what I
Okay.
think. Yeah.
Yeah.
Is there, and I know this is strange, but the child was born in July, would they then qualify for both? Because the stimulus was before July, the first one.
Yeah. Well, they would qualify for any that were approved, I would think, in the year
Mhm.
that they were born. I
Okay,
mean, the first one was last year. And this
Right.
it was paid last year. And this one was paid this year based on the December 27 law.
right. Okay,
So I think it's actually when it's paid that determines if they're alive when it's paid. Or
Okay.
they're entitled to it when they're born.
got you.
Anything else?
Well, I'll send my information to Cynthia, and if anybody would like to have our services, we'd be more than happy to serve you if it works out for you all.
Okay. Well, one of the things that we say here at Tarrant Baptist Association, for those of you that support the association or constituents of this association, we represent about 370 churches. We appreciate your financial support that you provide for us. It makes it possible to do things like this. But sort of our byline is we know how to do a lot of things here. And what we don't know how to do, we know good people who do know how to do it. And so if I don't know something about taxes, I'm going to call Frank. Or I'm going to call somebody else that I know in that arena. If you ask me a question about facilities, I know nothing about facilities. But I know some really great facilities guys that I'll refer you to. So please consider Tarrant Baptist Association to be a good source of information for anything that you're looking for. Becky is now in her 40th year. She knows a few folks. And I'm in my 20th year. I know a few folks. And David, our executive director, is well connected. Troy knows people all over the world. And so if we can be a resource to you, let us be that, okay?
And Gary, before I forget, I offer this also in Spanish, a webinar of what you just did. I offer it in Spanish too. And I also have one where I show the church the forms that are needed. Because a lot of churches still are trying to do a 1099 for the pastor. So I have one where we meet with financial people and so forth and so on. So, but I do both in Spanish if needed.
Well, that is the heavenly language. So congratulations, bendiciones.
Yeah, gracias. Gracias.
All right, folks, if you have any questions, let us know. You've got our contact information. Take care.
Lord bless you all.
Bye.